upon the breakout, gold's going to make a new all-time highs.
Gold-backed ETFs seen inflows of over $5 billion.
$0.8 trillion gold market.
Why are we the only guys that seem to understand this?
Makes your head spin. Hi, welcome to Live from the Vault. My name is Shane Moran, and I'll be your host for this episode, and I'm fired up. I'm excited. The first thing I want to do is welcome to the entire global Kinesis community. It is growing by leaps and bounds. We're excited. And also to the brand new guests that are just tuning in or just finding Kinesis for the first time. Welcome. You're really going to like this episode. Just going to bring you up to date before we go to Talking Gold with Andrew Maguire with our special, very special guest. I just want to, maybe for the benefit of our guests, really Kinesis is where you can earn yields for holding, sending, or even spending digital, physical, gold and silver. You might want to write that down. This is a whole new category, digital, physical, gold and silver. And so not only does physical silver and gold now trade against the USD and also the euro and Ether, okay, but we've recently added Bitcoin and more recently added Tether, which is the USD cryptocurrency. So that's big stuff. It's all trading live right now on the exchange. And we've got an incredible guest this week and something very special for you. I'm excited, I'm fired up, and we just got off a call and we have confirmation that next episode, we've got a confirmation of another special guest that's going to blow your mind. So stay tuned for that. A couple updates for you. Number one is Indonesia. What's happening in Indonesia? The Indonesian project, if you're not familiar with it, just back up, go to the last episode. You'll hear all about that project, but guess what? It's live right now. It's rolling out right now. And where is it rolling out? To the staff, as we talked about on the last call. So again, if you're not familiar with the plan, just go back to the last call. We'll get into all those details, but just wanted to let everyone know we are live and excited. I know the community is now probably very excited, and you have a right to celebrate right now. We're all excited about that. So as we go from episode to episode, we'll keep on bringing you up to date as we progress. Talking about updates, wanted to let you know that behind the scenes, the corporate team has been working day and night on a roadmap that is going to be revealed this month, okay, on a roadmap on where is Kinesis moving to this month. And I can tell you, Kinesis is moving at lightning speed. The effort and the work going on behind the scenes is absolutely phenomenal, but we are going to be revealing and unveiling the roadmap this month in June, so stay tuned for that. And so with that, I wanted to get right to today's call and today's Talking Gold episode. Why is that? Because as I said, we have a special guest today on the call joining Andrew Maguire on Talking Gold, and his name is Bill Midas Murphy. Some of you have heard of him, some of you have never heard of him, but let me give you a short, brief introduction before we get into the call here. He is the chairman of the Gold Antitrust Action Committee, which is GATA. Okay, GATA, that's what it stands for. For over 20 years, Bill Murphy has led the fight against the gold market and other precious metals market manipulation. Imagine, this fight's been going on since 1999, and GATA has collected and also published dozens of documents showing that Western Treasury and central bank efforts to intervene both openly and surreptitiously against a free market in gold. And so when it comes time to exposing the secrets of the markets, Bill is truly in a league of its own. And I got to tell you, everyone at Kinesis is fired up and excited to hear this conversation between two true heavyweights in the precious metals industry. And so with that, Kinesis global community, fasten your seatbelts. I know you're going to really enjoy this call with our own Andrew Maguire and our special guest, Mr. Bill Midas Murphy. Over to you, Andy, for Talking Gold.
Thanks, Shane, for that great intro. This is indeed a special treat. And there's no one in the precious metal space that does not know our friend Bill Murphy. He's, as you say, one of the founders of the Gold Antitrust Action Committee, GATA. Now, that's an acronym, I should say, that industry apologists fear. Welcome, Bill.
Thank you. Good to be here, Andrew. Thanks for having me on.
Oh, Bill, there's a lot of people watching this who've recently become exposed to precious metals through our gold and silver-backed Kinesis currency, but monetary system. I would just ask you to start by telling everyone just how GATA came about. That would be just really interesting.
Well, in 1998, long-term capital management had blown up, and I had just started my commentary on Le Metropole Cafe writing about the gold market. And I realized right away that the bullion banks kept stopping gold from going above 300. And I had a big commodity background. I was a limited position trader at one time, so I know something about commodity markets, one of the few things I know anything about. And I said, I kept writing that this market's rigged, this market's rigged. So there was a subscriber of mine named Chris Powell, who's my colleague, Secretary Treasury of GATA, who said, I'm tired of you complaining about it. Let's do something about it. So we formed the Gold Antitrust Action Committee in the early part of 1999, and we've been at it ever since, exposing the manipulation of the gold and silver prices.
Yeah, I think the first time I actually met you personally was when you invited me to speak at the GATA's Gold Rush 2011 conference. And that was my first public appearance after you had presented some bombshell evidence at the televised, if you remember, it was March 2010, that CFTC metals inquiry, that meeting that was called by Commissioner Bart Chilton. And I must say, poor Bart is now no longer with us. But if I can just say, there's one thing I think, because we had so many industry apologists, trying to attack all the things that you've said. And the amazing thing is, back then, they were everywhere. Every troll and their brother was out. There were people paid to come in quite clearly and try and, try and actually undermine the things you were saying and GATA was saying. But I mean, this is the quote, I think, that floored them. And it was Bart Chilton, he gave some testimony on October the 26th, which is 7 months after you dropped this bombshell evidence at the industry's CFTC metals meeting. Now, Bart Chilton made the following statement. Now, I keep this on my wall, and I quote, "I believe there's been repeated attempts to influence prices in the silver markets. There have been fraudulent efforts to persuade and deviously control that price. Based upon what I've been told by members of the public and reviewed in publicly available documents, I believe violations to the Commodity Exchange Act, the CEA, have taken place in the silver markets, and that any such violation of the law in this regard should be prosecuted." Now, do you remember, and who will forget this, the live feed being cut in your presentation to when you're dropping this bombshell evidence, and yet the rest of this 6-hour meeting, CFTC meeting in March 2010, had no interruptions?
Yeah, that was wild. I mean, of course, we can't thank you enough for your listeners that Andrew had sent this information to Bart Chilton, and he expected to be interviewed at this big panel that was being televised over the internet, and they didn't let him on. And so he got a hold of my colleague, Adrian Douglas, at the time, who was down there with me, going to say some words, to get what Andrew had to say in, and Bart Chilton was aware of it. And he was really the only man we've ever met in government that gave us the time of day. And I went through my conversation, and I didn't find out till later that I was the only one that was blacked out. But I got back to they had some questions, and they didn't want me to answer a question. But Bart went to me right away, and I was able to get in a lot of what Andrew had to say, and I changed some of my testimony about it. And we can't thank Andrew enough for doing what he did. But yeah, that was quite a sensational time. And God is taking on the richest and most powerful people in the world, and governments, and the Bank for International Settlements, and they just don't want us to be heard. And quite frankly, the rigging of the gold and silver markets will end up being one of the biggest scandals in American history. And it's just, and of course, it won't be allowed to be heard, and the press won't cover it until it blows up. It'll be just like Enron and Madoff and the rest of these major scandals.
Yeah, I mean, it was really, I have to put it down to GATA's work, that the industry apologists started evaporating pretty much straight after that. In fact, you remember, we had a massive rally pretty much straight after that meeting, all the way through into 2011, before we saw the next rig job. And obviously, fast forwarding to now, and we'll look at that perhaps in a minute, but finally, criminal charges have been brought against several of these cartel banks. And so that's kind of made these apologists kind of evaporate. But Bill, can you comment about that? Because I mean, this was crazy stuff. The amount of trolling that went on, and suddenly there's only, I think, one or two industry apologists that are still floating around, ignoring all of this evidence.
Yeah, well, as we like to say, as my colleague Chris Powell likes to say, we're conspiracy fact people, not conspiracy. What people use that word to take people down and mock them and so on, but it's conspiracy fact. But yes, we've had a lot of these charges against the bullion banks, and a lot of it's about what they call spoofing, trying to scare people in the markets. And for me, that's like Mickey Mouse compared to the real manipulation of the markets. But the thing that gets me the most is the Justice Department of the United States called this trading operation at JP Morgan, quote, a criminal enterprise. I've never heard that before in a government kind of circle thing. So it's gradually we're getting there. The manipulation of the gold and silver markets is going on. I could get into some stuff in a bit, but look at what's happened just recently. The stock market keeps going up in the United States, and gold all rallies are halted above 1740, 1750. It's gone nowhere in 2 months, despite all these riots in the United States, all the money printing, all that's going on. It's really something. Silver is finally coming to life, and we can get into that, but JP Morgan still does not want to go away and give up what they've been doing. The open interest in silver is went down to 135,000. I'll get into that in a bit maybe, but now it's on the rise again, and they're trying to stop it, but they got some problems.
Yeah, and I think, Bill, I know it's a great passion of you and Chris here. I mean, what this really means, I mean, the criminal side and the financial side is one thing, but it's important, and I know you want this to be the case, that people should not forget there is a human side to this criminal action committed by these banks. And clearly, I mean, by using this clearly privileged inside information, along with this power of massive leverage and concentration, these banks have been distorting real supply-demand fundamentals to such a degree that they were instrumental in creating hardship and conflict on a global scale. Now, this has continued, but as you've just said, I think you just mentioned open interest. Now, open interest, it's very, very, I mean, it's very pertinent that you mention that, because without open interest, that is really paper market open interest, as that evaporates, their game starts to evaporate too. Can you comment a bit, because I know people, we look at the big events, don't we? Can you comment when this became, these kind of things became more visible? I mean, no more visible than in 2008 after JP Morgan took over the bankrupt Bear Stearns silver short position. So that was so evident.
If I might say, I talk about this all the time with my people. The open interest in 2011, when the move started from $17, $18 and went to $50 at the end of April, May 1st, 2011, was 135,000 contracts in the open interest, which is the longs and short positions on the COMEX, all the way up. Then, it was my opinion, this is strictly speculation on my part, JP Morgan was buying physical silver all the way up.
Yeah.
Then, May 1st, they attacked, a massive attack, like $7 in one day out of nowhere, 50, and it's been down ever since. And since that period of time, we're talking about 9 years now, the open interest went up to 245,000 and above 200,000 for the last many years. Then all of a sudden, I don't know, it was a month or two ago, or it started to drop. And wouldn't you know, it dropped to little below 135,000 contracts. And that's when silver started to make its move again from, I don't know, pick a number, 14, 15, up to recently close to 19. Now, lately, it's been going up again, which is a bit disturbing because they let it go last time. So in my opinion, the silver market that JP Morgan, they went away and they covered, and now they're trying to stop it again. They're going to have to be blown out of the market by the physical activity and the physical shortage developing in silver. And I think that's coming. We can get into that. But it's really been a wild time because the open interest in the paper market is how this, what I call the gold cartel, the bullion banks, the Fed, the Treasury, the Bank for International Settlements, other central banks, that's the vehicle they use, along with throwing some physical into the market to stop all these rallies. And fortunately, the gold market has been in a shortage situation for some time now, and they're desperately trying to stop it. And now recently, silver's gone into what we believe a similar stage.
Yeah, and that's, so you're hearing that. You're hearing the same as us. Basically, there's massive silver shortages. I mean, from a wholesale perspective, and obviously the key thing is, yes, we know that the silver premiums are for coins, et cetera, et cetera. The retail side is significant premiums. But when we see the wholesale market, the 1,000-ounce bars in Europe and in specifically Loco London and Loco Switzerland, we see them actually restricting us to get any supply at all. In fact, the refiners, we spoke to the refiners just over the last couple of weeks, and they're saying actually because gold is in such strong demand, they've actually put silver onto the back burner, and instead of the weeks that we were going to have to wait into July, which was already orders placed a month ago, they're saying they could be months out. I mean, this is beyond anything that it's so unprecedented, and you're hearing the same things, Bill.
Yes, Andrew, if I may, I know this very successful retail dealer, very, very successful. It's very sophisticated in dealing with the futures markets and physical and so on. He's tried to get 100,000 ounces of silver last Friday, and they told him they can't deliver it to him, and they can't promise him when they can deliver it to him. 100,000 ounces. Yeah,
that says it all. I mean, let's face it. If you're in the supply business and you get an order, of course you're going to fill it.
Exactly.
So clearly, there's nothing around. So, as you say, how can the price still be where we are today? Whether it's in the 17s, the 18s, the 19s, it should be way above $50 at this point, simply based upon the price of gold where we are now. I mean, you mentioned, I saw you in a great interview recently, you mentioned the ratio trade, or the ratio. Crazy.
Absolutely. Well, you got the ratio for gold and silver. Normal, everybody can have a different normal number, but say 50 with it, it could be surely as low as 30 to 1. The gold silver ratio, which is gold over silver, went to 125 recently. 125 when it's just off the wall. And now that's being corrected. We got down as low as 95, which historically is through the roof. Silver is so cheap relative to gold, it's unbelievable. And I think we got something that's going to be so exciting. And I'm a big fond conveyor of Newton's law of equal and opposite reactions. As bad as silver has been for 8 years, it will be that good at least for the next year or two, and maybe longer than that. You had silver at $50 an ounce in 1980.
Yeah, crazy.
Then 2011, and now at 18 or 19, it's just ridiculous. So when it goes, in my opinion, when it takes out 20, it will just skyrocket.
Yeah, and as you kind of intimated a little while ago, guess who's long the physical market? You've just named them, JP Morgan. So a higher price for physical silver, but where have they got, Bill, where have they got this physical from? From doing exactly what you're just talking about, by raiding the market, by hurting people's livelihoods, I mean, do you remember, who can forget? And I remember when we were doing I think it was August 2011 conference, we put up on the wall, I think we were sitting with Eric Spratt, and we put up on the wall this massive $6 rinse on the 1st of May 2011. I mean, bear in mind, this was a holiday market. Every market was closed across the UK, no gold or silver fixes. Asia was on holiday. Everyone was on holiday. China was on holiday. The only market operating was the COMEX. And what happened at 1 o'clock in the morning?
It was so obvious, and there's been many of these over a period of time. You know, every time I speak to my friend John Embry of Sprott all the time, and we always talk about, God, it can't get any more obvious than this. And just whenever you say that, within a month or two, it gets more obvious what they're trying to do. The difference now versus these past many years is the physical shortages in gold and silver. And gold's been this way for many, many months. And now silver has entered the same arena. So we're getting set for some rocket rides here. And they keep puffing and puffing, but their house is going to get blown down.
Yeah, and we saw that break in the paper market, didn't we, on just the March the 24th. They smashed the price down. Now, of course, you just mentioned the BIS. Of course, we get to expect. In fact, it's almost become self-fulfilling because people have become so acclimatized because it's just been a paper market. And because the US-centric view is not of physical, it's been of paper markets. And because historically we've seen these BIS smashes where they have to mark to market at the last day of the month at 3 p.m. UK time, they have to mark probably $1 trillion or more worth of derivatives based on the price of gold to market. So what do we get? We get these smashes. This time, I think you're right. This time, I think it backfired because the market broke, didn't it?
Well, I was going to say, the end of May on Friday was stunning. We had we've had massive now taking of deliveries of the gold futures market. We had an up day at the end of the month, and it was quite extraordinary, really. But I have a question for you, Andrew. Why, I can't figure this out. You know, I think I know something about the futures market. Why is what I call the retail price, what you see on a Kitco or GoldSeek and things like that, 50 cents, 60 cents, recently under the spot May and July price in silver? Can you explain that? Because I can't explain it to our people. Why is it a 50-cent premium when it's in other words, the futures price is bonkers high compared to the visible price you see on the internet?
And I guess the answer would be, are they getting any physical though, even at that price?
Well, that's what some of my colleagues say, that what we're seeing is not a real price. The futures price we know is real because that's what people deal with all the time. So the question is really what's coming. The futures players know what's coming and they keep the price elevated.
Absolutely. And no one, knowing what you know, knowing what we're discussing here, knowing what the insiders know, and let's face it, we're close enough to these footprints over the many years that we can read it very well. Basically, who is going to offer any physical silver at these prices? Nobody.
Well, that's what we got coming in terms of explosions. I couldn't agree more with you, Andrew.
Yeah. So no, I think you've identified the very and silver, as we know, is going to be the rocket ship. It's going to be the thing that drives. You know what happens when silver starts to move?
Yes.
It takes no prisoners, does it, Bill?
No, and when it goes, it just goes, and it does it. You're right. It takes no prisoners, and it's been so bad for so long. I mean, the only thing I got right on silver the past 5 years, I actually saw it 2.5 years ago. I said, this is the most pathetic thing I've ever seen. And it took until just recently, the past few weeks, after all these years, for the physical market to start shaking up the JP Morgan crowd. But I'm convinced, again, as I mentioned earlier about Newton's law, once this goes, it will be a sight to behold. And people want, as you're talking about, people want silver now because it's so cheap relative to gold.
It's so cheap. I mean, I made a joke with the wholesaler the other day. I mean, good God, you could have built your bloody house with bricks of silver not that long ago. I mean, it is the cheapest precious metal anywhere, and the price, as we know, the price has been so contained for so long that it's almost, people accept the price. In their minds, they accept, oh, well, yeah, I'll tell you what I'll do. And this is what we see a lot of now. We see the speculators trying to gain a little alpha by selling calls against what they think is the range for silver. Bill, you've been in the business. It's the options guys that get carried out feast first. You start selling naked calls against something like silver, you've got to have your head tested, don't you think?
Absolutely. And the thing is, silver's been so bad for so long, they're conditioned to do this. And they write the calls, they make the money. They write the calls and make the money.
Yeah.
But this time will be different, and you're right, they're going to be carried out.
And who's on the long side of this when it's silver?
Well, I know I am.
I'm loving it. I'm loving it. It's going to be sweet revenge. But of course, JP Morgan is, of course, having robbed silver from on every discount, like that May 11th, May 1st, 2011, $6 rinse. You'd think they'd have made enough money then, but no. They continued to ride on the back of the BIS of the obviously act. JP Morgan, of course, act as an agent, don't they, for the cartel? They have to have agents, so that's insider information. So if you know gold's coming down, well, it's not really rocket science, is it? That you can take silver down in the paper market, that is.
Well, JP Morgan's the Fed's bank. You can't get any closer to the money and power and people that rig the markets and what they want. You know, go back to Paul Volcker, former Fed chairman, who publicly said gold up is bad, gold down is good, because it's viewed by the public so much. I mean, if gold went up $150 tomorrow, ooh, what's wrong? What's wrong? This is terrible. You'd get comments finally from all the financial pundits. And so it is a barometer of U.S. financial market health. I mean, that's the way it's viewed, like it or not. And so that's why they've been going after gold all these years.
Surely you're not talking about this same bank that's been deemed to be a criminal enterprise, Bill?
Well, JP Morgan's made so much money on this, and it's a question of whether, they're going to finally run for the hills or not. And that's why I watch this open interest. It doesn't mean it's them, because there's people that talk about them there's two sides of this. I don't know, but what I do know is what you're talking about. The tightness in the physical market is very new, or pardon me, not new. It's new enough, and it's gaining steam, and people are holding back. Some of the silver producers aren't selling at these prices. They know what it should be. And Keith Neumeyer is a good example of First Majestic, who's one of the few people in the silver world who will talk about this subject. And we're getting so close to some real excitement. I can taste it.
Yeah, and I think I went public on this recently. If you, as a wholesaler, go to UBS or UBS primarily holds the largest store of silver, supposedly available wholesale silver. You ask for any size, number one, you'll be rationed. Number two, you are told that if you press and you insist on larger orders, they'll blacklist you. Don't even bother phoning back. We're not going to supply it. End of story. So whichever way you look at it, but I mean, I think what we're talking about here, though, Bill, perhaps we're talking about the end of the 50-year controlled, officially, let's just say the whole reason the COMEX futures contracts were launched in 1974 is pretty close to 50 years ago. And that was following Nixon removing the dollar convertibility into gold in 71. What was it for, Bill? There was only one reason, wasn't there?
Well, there's been some reports about that, about rigging the market and influencing the market through the paper price. My colleague Chris Powell has documents on that, and
Yeah.
That's, and all I know is what they've been doing visually. And because that's what I do every day is follow the markets and who's doing what and so on. And it was clear to me at the end of 1998 what was going on. And long-term capital management talked about was blowing up, and they bought the bullion banks together, and the long-term capital management leased out all this gold, and they didn't want it. You have to get out of your positions when you go bankrupt. So they had the bullion banks take over their positions and trying to keep the price down, and it worked for another couple of years. That was back when gold was at $300 an ounce.
Yeah, and our ex-prime minister Gordon Brown, what did he do? He sold it all at the bottom.
That he sold, I don't know, half of England's gold, and a lot of people were skeptical about what GATA had to say back then. It was May 1999.
Yeah.
All of a sudden, out of nowhere, they announced they're selling half their gold up front. Now, normally, when you want to get a good price, you quietly sell your gold into the market, and that's what you do. You don't announce in advance you're going to bury the gold market, and that kept gold in the dumpster for 2 more years.
And that would certainly be the way of ensuring you get the worst possible price. I think one of the things that GATA uncovered through, it could have been through Adrian Douglas, it could have been through one of your many, many good people, but that the fact that UBS had an email the 24 hours before that gold would not rise above $300. Deutsche Bank, that was it. Incredible.
Yeah, I remember it in advance, yeah.
In advance, 24 hours in advance.
Yep.
Suddenly you've got massive short interest coming in. You'd think, none of these things have ever been pursued, but they're there. And one day, the history books will just show how disingenuous and how a system like this cannot operate unless it's a physical supply-demand situation where you have a physical on one side, the demand on the other. You don't have the ability to create limitless amounts of synthetic, whether it be corn, whether it be oil, whether it be gold or silver or anything, should not be able to create limitless amounts of it to just play the market and ruin people's lives. Some of these industry apologists, and we know who they are, make their living what we call doing the hurt and rescue, coming to a producer and saying, "Oh, I think you should hedge some positions here," and then throw some bad information out, and it's all orchestrated and it's talking their own book. So in other words, they'll create an option structure, make some money out of it, when it was totally unnecessary in the first place to actually create that option structure and to force some form of hedging. We had that happen with, I know GATA covered a lot of this. Was it with Barrick in quite some years ago?
Oh yeah, that was Barrick. Barrick was enemy number one. We went after them big time. I mean, they had a whole hedging strategy near the bottom of the market. And the irony was, and there was massive hedging. They had different management back then, and they've come around. They had to give that up. They ended up losing like $8 billion on these hedges when gold finally began to take off, and they got slaughtered. And they were the leader of the gold companies going along with the bullion banks.
Yeah, and I wonder who was on the correct side of that trade.
So it was quite something. And there was a case down in New Orleans with Blanchard and Company, and there's all sorts of things developed. Basically, they, in a way, admitted what they were doing, but they couldn't be punished because they were doing it for the U.S. government.
Yeah, are you referring to the lawsuit? I think it was Blanchard, the lawsuit where they were charging storage fees on paper gold.
It was all kinds of things, and it was. All I know is they sort of admitted what they were doing, but they had a mea culpa in the sense of, well, the government had made us do it, or that sort of thing. But anyway, the most important thing is that they blew up eventually, and I don't know if they're hedging now or not. I don't think so, but that was that was a long time ago now, 20 years, 18 years.
Yeah, Bill, I know that at Le Metropole Cafe, you every single day you follow the markets, and you've been drawing attention. I think one of the things you just outlined today is the real open interest evaporating. I mean, the remaining open interest, I mean, if you remove the algos and the fact that these algos are really just competing against each other, it's not even real open interest. So the open interest that you're drawing attention to is evaporating. And this is what's making it more difficult for insiders to employ the historical wash and rinse cycles. So I think that's such an important thing for you to keep, telling people about, to drawing attention to this fact.
Well, I'll do what I can. I know this is what the life I have chosen, as they say. So dealing with it, and I'm just looking forward to some real excitement. They're doing everything they can to keep gold and silver from exploding, but they got a losing cause this time. I mean, if there ever was a time in American history, anyway, for the gold and silver prices to soar, it's right now. I mean, with all the money that's being printed and thrown in the system, nobody talks about the quid pro quo for putting all this money into the U.S. system, which had to be done to bail out so many people that were devastated. But what's the quid pro quo? I mean, why not do it forever? 2 trillion, 10 trillion, 50 trillion. Why not just keep doing it? Well, you can't. And this money debasement in the United States, and the dollar is finally reflecting in that. It's been very weak of late. It's just going to cause, again, these price explosions. And it's just a matter of ticking time bombs here.
Yeah, and when this overdue, and there's no doubt it's overdue, this gold price reset comes, it's going to be a direct result of the unwinding of the massive naked short unallocated gold market. And that's, of course, linked to billions of dollars worth of underwater mismatched derivatives. And we know this now. But the important thing is, I think this is from a wholesale market perspective, and this jives with what you're saying. As the physical solution emerges, i.e., if no one wants to put something on offer to sell for physical, then the algos can just consume each other. And I mean, if they get a wrong price, somebody is going to take that and take a delivery of it because they can't get the physical anywhere else. So ultimately, it really removes the need for any kind of fix. You know, if you have a real physical supply demand price, and it's 24 hours a day, you don't need a fix. You don't need a point where someone can orchestrate it to a certain price. And I think that's the final lever, I think, that the cartel have. And so, you know, as I say, this outcome is inevitable because the physical market is drawing this liquidity out of the paper markets, and you're seeing it. You just talked about it with open interest. It's the only real test is the open interest. Well,
it's coming, and we've been waiting a long time. And again, the countdown is here. You look at gold sideways for 2 months; they're trying to stop it, and now the physical silver, you know, until recently, has all of a sudden shot up, and it's a very exciting time, and they're there, but they've got a losing position this time after all these years, and it's going to be a very exciting summer, I think.
Yeah. So what do you expect? I don't want to pin you down here. What do you expect as we move forward from here, Bill? And I know you've been very kind with your time here, but what do you see here?
Well, you know, gold has made all-time highs in all currencies, or many 73 currencies or something, except for the United States and Switzerland. That's got to take out, you know, 1900 and go way above 2000. And I'm a silver guy in the sense of I've been looking for $100 silver for years now for silver to take off. So my opinion, it gets through 20, it shoots up to 50, it takes that out, and we go to $100 silver. And who knows what it could go above that? It could go way beyond that, and probably should. So, I mean, I'm not limiting it to that, but there's no doubt in my mind that silver is going to go to $100 an ounce, and it's only $18.50 today.
Yeah, and I think that's if anything, that's what we all knew this, didn't we? We all knew that ultimately the regulators were not doing their job. Why? Because as you've just described, it went deep, deep, deep down into the rabbit hole. The BIS, the agent banks that operated for them with inside information. I mean, so essentially the regulators really did nothing because and I know that Chris Powell's coming on to talk about this as well, but essentially what this was an officially orchestrated way of capping the price of gold. In other words, the COMEX was the tail that wagged the physical dog. And so, I'm involved in the gold and silverback Kinesis monetary system. I just saw that as the next step for us is to bring physical to the market, to get people to use physical gold and silver. And I don't just mean, why would you spend it? If I'm going to spend my cheap, my worthless fiat currency, but if there's a way that I can use this and take a share of the fees that are generated by any money circulating, whether it's a credit card or whatever, but essentially, what we've done here is really seek to get the physical market so pumped up with physical that it assists in blowing this paper market out of the water. And so essentially, what is exciting me, and really, I'm not here to just talk about Kinesis it's not a sell job. I'm just trying to say, to me, this is an institutional solution, and it's for everyone. And so, basically, we all, and we're talking about we're talking about global vaulting providers, asset managers are able to eliminate vaulting fees. Now, basically, the only reason you would have an unallocated contract is because it was cheaper to store than physical. We turned that on its head. It's a game changer. So now people can store their physical outside of the banking system, zero storage fees, and participate in the entire system. So really, and then you add in the Sharia. We've got 100 million members of a Sharia compliant company called NU, which is an organization that has endorsed, this, because it's not a yield, because it's a share of fees that are circulating transparently around the system. This is going to create, they've got 7 billion in assets. This is going to create the need for us to buy massive amounts of physical gold and silver. So I think, to me, this is really, why I'm involved in this. But Bill, I can't tell you enough how much we appreciate what you do and everything you've done for all these years. When I know you've run into a lot of heat in your time, but can you tell us how people can follow you at GATA and Le Metropole Cafe?
Sure. Well, my colleague Chris Powell does a great job at GATA.org. They can go there, and it's a free service. He puts out all kinds of stuff, and then I write Le Metropole Cafe and www.lemetropolecafe.com. People can sign up for a 2-week free trial if they like and see it's of a value. And I've been at this, 21 years now. Is it 21 or is it 22? But I mean, it's been a long time, and I love it. And it's just so much fun to look forward to all the excitement coming, because many of these past years were quite tough, quite frankly. And it's our time is here, and congrats to you and all the work you're doing, and it helps out so much. And we go way back now, and you're doing a great job, and best of luck.
And you're a warrior, my friend, a warrior. Anyway, that's great, Bill. Thank you so much, and you'll come back again, I hope.
I'll look forward to it. Good luck, and let's chat again soon. And thanks, guys.
And a beer next time we meet.
All right.
All right, there you have it, Talking Gold with Andy Maguire. And thank you so much, Mr. Bill Midas Murphy, for that insight. I told you it was going to be awesome, and I'm fired up now. Talking about manipulation and talking about market manipulation, in my personal opinion, Kinesis is the solution. I'm sure you agree. Kinesis is the solution for all of this manipulation that's going on in the background, that has been going on around for many years. We're talking about digital physical gold and digital physical silver. And so if you enjoyed this show, we have another industry titan, okay, coming to the show, confirmed next episode. So stay tuned, keep your seatbelts fastened. I want to encourage everyone to go to the Apple Store or go to Google Play, depending on the mobile that you have, and download the Kinesis app. And also, if you're using the Kinesis app, give it a rating, okay? Rate. 5-star is good, all right? It's just an amazing, simple app to use. And with that, get minting. You know, minting, what does that mean? It means create your currency, create your digital physical gold through the minting process. If you don't know what it means, don't worry. Go to kinesis.money, go to the Learn and Earn series, and there's 11 short videos that will bring you up to date on how the entire system comes together and how you can earn passive yields for holding, sending, or spending digital physical gold and digital physical silver. So with that, we will see you next week, next episode. Bye for now.